Hi traders, it's Jay with thetraderinstitute.com. Just want to remind everyone that futures, forex, and options trading is risky and you can lose money. Therefore, you should only trade with risk capital. Please consult your financial advisor or investment professional before making any investments in futures, forex, or options. No guarantee of income or solicitation of futures, forex, or options or any other financial instrument is being made in these videos.
The evening of the 26th, coming up on 7:40 p.m. Eastern, just coming up on 7:40 a.m. here in Hong Kong on the 27th. And just to review how the levels performed yesterday, well, I think the chart really says it all. It's a 5-minute chart of the ES June contract. You can see that on the times are in Eastern time, so after our Asian session, the market came up and tagged our level at 87.25. Only went through by maybe, looks like maybe two ticks. And went straight back down, kind of ignored our levels at 84 and 85, but we'll talk about that later. And where do we come into? 82. Once, twice, three times. It only went through by two ticks and back up to 84. This time it respected that level, back down a bit, back up to within one tick of 85, back down again, another bounce off 84, push through 84, back down to test 85, and then finally we break to the upside and we come within one or two ticks of 87, 2087, back down again to test 85 to the tick, and then we blasted off into the London Open all the way up to within one or two ticks of our level at 20.93, back down and pushed through. Admittedly, it pushed through 89 there quite a bit. If you consider 1 point quite a bit, so 4 ticks, back up to 91.25, established the London high at 90.25, established the London high at 20.91.25. So our level for the high of the day was 20.90.75. We come back down, we get the same thing. We push through this level at 89, come back to it, then all the way down to 85 again, still during the London session. Back up to 89, push through it by 2 ticks, and back all the way down to 85. Push through it by 1 tick, tested it again to the tick, back up, and then just some sideways action until the US Open. And right at the US Open, we went down to where? 2084. From 2084, straight back up to test the London highs, come to the exact same level, 20.91.25. Our level was 20.90.75, so only pushed through it by 2 ticks. And then we started going down, and it was basically a big run after the consumer confidence news came out. And we had talked about how 80.25 would be a significant level. As you can see, that's in black. And basically we're pretty much straight down to 82. And then at 82 we did get a bounce back up to 84. Then from 84 back down to our level at 80.25. we went through, looks like 3 or 4 ticks. I think it was 3. I think the low was, what was it, 2079.50. Let me take a look here. Yeah, 2097.50. So we actually penetrated the low by only 3 ticks, or our level by 3 ticks. And then we turned around, came back up, come back into test 82, bounce down off 84, back up. We pushed through 84 and 85 to our level at 87.25, back down to 84, play around a little bit, back down to 82. And I mean, it just gets silly how many times did we bounce off these levels, you know, within 1 or 2 ticks yesterday. It's really just ridiculous. Come back into this 84, 85 level, back down. We push 82, we go as low as 81. We didn't quite get back down to 80 quarter there, and then come back up to 85 twice, test 84, back down all the way to same level, 80 quarter. This time only pushed through 2 ticks, and then we launched into the close, and then look what happened. 89 was pressed by a couple ticks, and then straight back down, and then here we are now, back between 84 and 85. So the levels really, you know, you can see all the circles on the chart where it tested or bounced off our levels for really pretty good moves. On the ES was just amazing. So going into the 27th, Wednesday regular session, London and regular session, I don't see much changing. On the ES, 2080 is still the significant level. 2080 quarter. To the upside, I would say 2090. We had it at 2093 quarter. I'm going to mark that level off as significant by changing it to the black color, and everything else pretty much stays the same on the ES. So we need to come out of this range, either get above 2090 or go below 2080 3/4. To the downside, significant levels below us are going to be 2074 quarter and 2066 quarter, and to the upside, 2100 quarter and 2105 are going to be the major levels above us. So it'll be interesting to see what happens, but we've got some nice targets should we come out of this range. And just a friendly reminder that there will be Fed news on Wednesday, so keep that in mind. The FOMC statement and federal funds rate will be at 2 o'clock Eastern. There's also crude inventory, so we'll take a look at crude oil next. All right, so on crude oil yesterday, I don't believe we did the projections or review, but we did have the levels and we did post them in the Swing Traders Club for our members. And you can see there's 3 black lines, so we felt those would be significant, and they definitely were. Post-Asian session, we did come up to our line at 43.12. We only pushed through it by 1 or 2 ticks, and all the way down to our level at 42.60. We didn't quite get there. It got as low as 42.64, so within 4 ticks, back up to 43.12 within 2 ticks, back down to 42.60, as low as 42.50. Going into the London session, we also had a level you can see there at 42.52, and basically that called the low. That's the low of the day there. Within 2 ticks, we get back above 42.60. We test it once, and then we shot off through the rest of the London morning, all the way up to 43.25. We pulled back a little bit, tried 43.25 a second time, couldn't do it, came back into 43 evens, that area, and then finally started to push up. And you can see that every push up, whenever we push through, we got a reaction back, push up, reaction back. Let me get the pen here. Push up, reaction back, push up, reaction back, then we break through. We still get a little bit of reaction here. We push through, back to tag our level, 43.25, back up, 43.47, back to our level, 43.25, push up to the next level, 43.60, back to our level, 43.25 within a tick, back up. We kind of play around in here until the consumer confidence news came out, and then we push all the way up to 44.04. We do get a nice reaction there, and then tag back 43.93. We try to push up, can't do it, and basically what do? We just played around between 44.04 and 40.93 until maybe what was that, an hour ago, 1 or 2 hours ago, and then for whatever reason crude shot up to where its high is now. We don't have a level up there, but it's come back down and it's resting exactly on our level. So there was plenty of opportunity just to play pullbacks for the long side action yesterday on crude oil. You can see how many multiple times we pulled back to levels and then launched off them and pulled back and launched off them, all the way into the New York afternoon, where it basically just went sideways. Okay, so again, nice day for our levels on. All right, so on crude oil, what do we see going into Wednesday the 27th into the inventories? Got a couple significant levels above where we are right now. Obviously, the high that was just established, 44.84, that will probably be significant. 45.20 and 45.51 are the significant levels above us, and there's some in between and further up. If we were to get above 45.51, I'd expect at least 46.04, and above that, we should go all the way to 47.21 without issue at all. Now to the downside, below 44.28, you can see that we have a bunch of levels, but ultimately 43.12 will probably be a major level, as it was yesterday, and so will 42.60. Below 43.12 and 42.60, then we'd be looking at a major down move to either 41.40 or 41.13 with lots of hiccups, as Simon calls them, along the way. So that's what I see for crude going into the inventories on Wednesday.
All right, I just quickly wanted to mention we're having a 2-for-1 special until Friday midnight, April the 29th, 2016, for the premium package. That's mentoring, live trading during the US session, and comprehensive training and support through that premium package. Now normally it's $8,900. We're doing a 2-for-1 special, so it's going to be $9,000 for 2 people. It's $4,500 per person. We've also done something. If you don't have another person that wants to come in with you, we will match another person with you, so you can still benefit from that 2-for-1 deal. We have a 5-day money-back guarantee, and you can secure that guarantee. You attend 5 morning sessions, and you get full access to the members area, correct way of reading and trading volume profile. You get to learn the ACE methodology, how we do longer term swing trades, shorter term scalps. You get 12 months free access to the morning and afternoon trading sessions. Okay, after the 12 months, it's $299 a month. You also get 12 months free access to the Asian session, which is this session, which is also $2.99 a month after the 12 months. We'll also include the dynamic reversal levels indicator, the power line indicator, and the price magnet indicator. So you can sign up just by clicking on the 2-for-1 special there. If you don't have a PayPal account, you can use your credit card and take advantage of this limited time opportunity. Take care, everyone, and good trade.